Hi everyone, welcome to a new episode of Straight Talk with your host Firas Al-Masadi. It is very dangerous and risky to use banks' money to invest in the real estate market during booming markets when prices are off the roof, and it's extremely safe and immensely beneficial to use banks' money to invest in the real estate market during down markets. So stay with me, I'm going to be explaining this in a very simple format so you understand it in numbers. Let me start with the booming market. If you bought a property for 1 million dirhams and you got a mortgage on the bank 25.75, so your invested capital is 25 and your loan is 75. That means you invested 250,000 dirhams and you took a loan from the bank for 750,000 dirhams. And to keep it very simple, I'm using really extreme cases. So let's say that the market went down by 50% because you purchased when the market was really skyrocketing, and you most likely have done a decision that is not very well informed for you to end up in a situation where the property value went down 50%. But anyway, for any reason, property value went down by 50%. That means the property is worth 500,000 dirhams. And that also means that if you want to sell the property for 500, that means you need to pay 250 from your pocket to cover the loan of 750 in order for you just to exit, which means you lost 250 here and you lost the 250 that you invested initially. Your total loss is 500. So that's why it's really dangerous to over leverage yourself and to overly expose yourself with banks' money during booming markets, because you're buying at high prices. And every market that has gone up, definitely it has to come down at some point of time. But I gave you the 50% example just to keep it very simple to understand. So on the contrary side, let's say that you bought a property worth of 500,000 dirhams during the lockdown, during the COVID-19, when people did not know how soon they would see the sun again. And you took banks' money, so you invested 25% of that, which is 125,000 dirhams, and you financed 75%. That means you financed 350, 375. If the property market goes up, not by 100%, I'm not going to tell you that it's going to go back to 1 million. Let's say it went up just by 50% and it took 5 years to go up by 50%. So every year it was going up by 10%. That means you're going to resell in 5 years for 750. Again, I'm keeping numbers simple, so I'm not really calculating the net present value and the rent that you would get on the property, the cost that you have to pay to maintain the property, the cost or the amounts that you have to pay to service your loan. Just to keep it simple, you bought at 500, you financed 25%, and you took a loan from the bank for 375,000 dirhams. You sold in 5 years for 750. That means you made a net profit of, or you made a profit of 250. Your initial investment was 125, and you made a profit of 250. That is 100% return on equity, not return on investment. Return on equity, on the capital you invested. And that means you've been making 20% per year capital appreciation. And this kind of money, imagine that you bought a property for 2 million or for 10 million, work out the same numbers. Buying in today's market in Dubai using banks' money can give you immense value because, of course, number one, you're buying at very low prices, and that's the effect of buying at very low prices. There's a very low risk for you to use banks' money during down markets. The interest rate and all the cost that comes with it plays, it's never going to be significant in the light of how much you can actually make. And we've seen this with people who invested in 2010, 2011, and they exit 2013 or 2014. They doubled, they tripled, and they made much more actually than that even on their equity. So low property prices, interest rate is very, very low. And of course, the loan to value is very attractive. Banks are giving more than ever before. So whatever you required before COVID-19 or last year to place as a down payment to purchase a property in Dubai. Today you require probably 50% of that or 60% of that, depending on your financial ability, which means lesser down payments, lower interest rates, and much lower property value. That is the property in Dubai in 2020. So especially if you're an end user, if you're a tenant who want to become a first home owner, I think there's no better time, or there could be no better time to invest and to enter the real estate market. Definitely there is a resilience point in terms of prices. I think if prices would continue to go down, it would have gone down already, particularly for prime units and prime developments that are undersupplied. So yes, we might see some more cyclicality when it comes to projects that offers 10,000 units that are more or less the same. But when you look at unique projects such as whatever's coming up on Emaar Beachfront or MJL, Medina Jumeirah Living, or La Mer or City Walk, these boutique, unique, undersupplied communities, you can never go wrong if you enter the market at today's prices. There are great deals on the secondary market, on the resale market, and there are definitely also some really good offers from developers. And if you're interested in entering the market, whether it's to do with leasing or buying a property in Dubai, or even if you want to exit from the market, which is a very bad time to exit from the market, but for whatever reason, if you want to exit or you want your property to be managed, connect with us at FAM Properties. You can actually drop me a direct email to ceo@famproperties.com, and I will do my very level best to reply and to address all your questions personally. I hope that you enjoyed this episode. Feel free to circulate and to share with your friends and with your community, and stay tuned for much more to come from me. You are watching Straight Talk with your host, Firas Al Masaddi.